Hello, my name is Steve Bigelow with the Candlestick Forum. If we can identify with great accuracy what the overall market trend is doing, then we can take advantage of the best candlestick sell signals if that market trend is heading lower. So this is where we observe the obvious. Remember up here, when it came up in the overbought condition, we had a bearish harami, a doji, and then selling. That eventually told us the 200 was going to act as resistance. And when they gapped down through the T line, that told us we were in a downtrend. Now look what's happened. A bearish harami right at the 200-day moving average in the overbought area, followed by a bearish left-right combo, followed by confirmed selling. And today the Dow closed just below the T line. Now remember what one of our strongest signals is a doji sandwich. If the markets, we wake up tomorrow and the pre-market futures are showing the market's going to trade lower, we can be shorting with great gusto because we know that's probably using the doji rule that we're going to have a bearish doji sandwich, which means the market is still selling off. And there's going to be lots of good short positions to take advantage of. You add the additional confirmation that the NASDAQ, after it came up and kind of reached this resistance level, did a bearish left-right combo, closed back below the T line, and continued to trade lower. Now, the one thing I always stress to everybody is when you close below the T line, the probabilities go dramatically in the other direction, that an uptrend is over, a downtrend is likely in progress. So if you got that information and you can identify strong sell signals, a bearish flutter kicker signal in Amazon, this is what we call 2+2 analysis. You had a gap down doji after a little bullish candle in the overbought condition, a doji right smack dab on the T line, and the doji rule tells us the price is going to move in the direction of how they open after a doji. In this case, they gapped Amazon down, which told us two things. We're in a bearish flutter kicker signal, a strong sell signal, number one. And number two, they're trading back below the T line. Probabilities are pretty strong. We're heading in a downtrend. Do we cover here? If you were short, no, we wait to see whether they're going to come back up above the T line. And as you can see, it did an evening star type signal, continuing to take this lower. This is not rocket science. This is merely identifying when the strength of the bulls or the bears are being illustrated in a candlestick chart. Same scenario on RPD. You can see the bearish left-right combo. You can see kind of how it was rolling over, closed below the T line, started shorting yesterday or buying puts yesterday, especially near the close when it was getting down here near the support level. But your stochastics are heading down. Lower open today. This is what puts you in situations where the probabilities are much greater in your favor that you're going to be in a big price move. Does it happen all the time? Definitely not. But the probabilities of being in a good, strong, profitable trade are greatly enhanced. So we can see where the probabilities start going against you. If you're in the overbought area, a shooting star, a doji, bearish confirmation. 3 times it failed here at the 50 and closed below the T line. What did that tell you? They're heading lower. What would we do with this now? Once again, if this opens lower, look at your stochastics, still heading lower. If it opens lower, you've got a high probability you're going to have a bearish doji sandwich, which likely means this level is not going to act as support, which means you've got a wave 1, wave 2, where you can see exactly where it failed. Wave 3 could have the same magnitude move as this move right here. Will it do that? Who knows? But at least we know the probabilities are that it's going to be heading in much lower levels. That same doji sandwich prospect that if AMAT opens lower tomorrow, you've got a bearish doji sandwich after sell signals up here. And anytime you see selling with what we call the booster, kind of a booster rocket to the downside, that tells you not only did they squelch the bulls, but they rammed it in the other direction, usually indicating you've got a strong downtrend, again, with your stochastics rolling over. Where's your first likely target? Probably back down in this area. PayPal, shooting star, failure at the 50. Bearish engulfing, bearish doji sandwich, more downside. This afternoon, they had their earnings. This is where a lot of people say, what do you do with your with earnings? If this was indecisive and bullish, or showing some strength, that would probably tell you that people in the know are buying. The fact that they were still selling this on earnings being announced this afternoon said somebody didn't think there was going to be very good news on the earnings front. Right now, it's trading down here after hours. Does that always work? Let's put it this way. The probabilities are always in your favor when you can see what people are doing going into a news item. Very simple analysis. When do you buy? There's your McMuffin. That's a morning star signal followed by a doji sandwich or your morning sandwich. Very strong bullish reversal. Off the 50 in the oversold area. Same rhetorical question. You always get big price moves like this? No, but you're putting yourself in situations where the probabilities are greatly in your favor that you're heading in the right direction. When to buy? Right down in here. When to sell? There's your bearish engulfing signal in the overbought condition. And look how far away you are from the T-line. That's where you would have been putting your sell stops in, ready to take profits. The T-line is one of your strongest indicators. It acts like a natural support and resistance level of human nature, or has Fibonacci characteristics. So when you combine the information that's built into candlestick signals, which is the graphic depiction of everybody buying and selling during a specific time frame, or basically showing you what investor sentiment is doing, and then you add the T-line, which is a natural support and resistance level of human nature. When you combine those two, you've got an extremely powerful trading platform. Anytime you see a sell signal and a close below the T-line, stochastics rolling over, close it out. Could it bounce back up? Yes, but the probabilities are if they've closed it below the T-line, you want to keep yourself from being long in a situation like this. High probability trade setups. You can see the evening star type signal in the overbought area away from the T-line. Now you've got a doji right here on the T-line. Very simple trade. If we wake up and the pre-market futures are showing the Dow's going to open up down 140 points, and this is opening lower, you can short immediately knowing that a bearish doji sandwich is not going to support you anymore at the T-line. Your next likely target is filling the gap down here at the 50. Everything built into a candlestick chart is pure common sense. What are they telling you in the graphics of the candlesticks? And what is your natural support and resistance level of the T-line telling you? The T-line is probably one of your strongest indicators. You can throw anything you want to on these charts. Bollinger Bands, Fibonacci retracement numbers, trend lines. But this is telling you there's a change of investor sentiment. With that, you might want to join us this Saturday. We're doing a mini spotlight training. They're supposed to be scheduled for an hour, but they usually go for over 2 hours. You get a lot of information, and it's very inexpensive. So come join us. That'll be it. We'll see you in the chat rooms.